If you are tired of losing money today, tomorrow, next month, next year, let's say you're someone that's taking loss after loss when it comes to your setups. Maybe you're not looking for the best, high probability setups to take trades from. I don't care if you trade the future markets, the Forex, options, whatever it is. Watch the video and I'm going to share with you the best way to go about determining what is quality versus not quality when it comes to trading the future markets. Again, you're in this business to do what? To make money. So how many of you out there have a goal to do that? I know I do. So it doesn't matter if you have a smaller account or a larger size account, because overall you should be looking to want to compound. All right. And that means, building that account size up, small account if you have one, so that you can look to take some withdrawals, right? To be able to say, okay, I've proven consistency over time. I've proven that I can become profitable. Now I can do this full time. I know a lot of you probably are itching to want to quit your job at some point and start trading futures, creating your own business to where you can sit at home or on the beach somewhere, or vacationing on the opposite side of the world somewhere. Or maybe you have plans on moving, being what's called like an expat and moving away from this country to another country. I know there's interest in that today. A lot of people are leaving the United States just to go over abroad to live. And this is a great opportunity to be able to do so. Okay. But anyways, let's talk about how you can actually go about determining the difference of a high quality versus a low quality. Okay. Meaning a high probability versus a low probability setup. Now, first and foremost, you've got to get the structure of the market correct. I always talk about that. I always start and look at my higher time frame charts. So I'll start, for example, looking at my 120 range. Yes, I trade range-based charts because to me, they're just cleaner to the eye. If the market is bullish, then I'm only looking for pullbacks to go long. All right. Even on my lower time frame charts, I'm not taking my trade off of a higher base on my higher time frame chart. I only simply determine the structure or the direction of the market and then mark up my chart at a zone on my higher time frame chart to start with. My entries from which I trade from come from my lower time frame chart, the 24 range. Okay. So again, getting the market structure or getting the direction of the market correct is of the utmost importance. Okay. Now, what I'll do from there is once I have a zone marked up, I'll look for opportunity to take a trade in the same direction in which the market is moving from a lower time frame chart. So for example, like right here, this was a supply setup. Okay. I talked about this in a prior video, but the reason why I would take a opportunity and going short here is, for one, we have broke below this low here. We've pulled back and we broke structure below here. So a lot of you probably will classify this as definitely a break of structure, right? And a shift or trend in or change in the market, right? Direction. But also some of you may call this what's called a chalk, a change of character. A lot of people like to call it that. Now, as the market is retracing back to my zone, and at this point we're bearish on the higher time frame. So I'm only interested in looking to do what? Go short. Now, getting to what I want to talk about in reference to helping you stop losing money and taking losses, meaning one bad trade after another bad trade, is where we want to look at the lower time frame chart. The larger zone is where we have the higher time frame zone, which is the supply area, marked up. Okay. If you trade supply and demand, this is what you need to hear. This is what you need to know. Now, what I'll do then is, if I cannot find, say, for example, a lower time frame zone on the inside of this higher time frame zone, I talk about that in lots of videos. Just yesterday, I talked about it in a setup, I believe, which was right here in this area here, which was setup number 1. Yesterday, I talked about 3 different strategies. 1, 2, and 3. Okay. Please watch that video if you have not. That was the video dated from July the 2nd, which was yesterday. Now, the difference in when it comes to taking, quality setups is there that imbalance or gap resting back at the zone? Okay. As you see here, these are 2 different setups of demand. Okay. I'm sorry, not demand, actually supply. I don't know why I have this as marked as demand. This is actually supply. Guys, I get this. I do this from time to time. This should actually be supply, not demand. Let me change this right quick. Sorry about that, but you guys get the picture what I'm talking about here. So that should be supply, and this one should be supply as well. Let me change it while I'm sitting here making this video. Okay, because these are 2 different types of supply setups here. We have one that is a one with no breaker structure versus one with a breaker structure. But both are intended to move or moving in the same direction as the what's going on in reference to structure on the higher time frame. Now, getting back to what I really want to say is that we have two setups here. The market rejected or reacted at the higher time frame 120 supply zone. Okay. Now, all I'm looking for is an area where the market made an aggressive selling to the downside. That it could be with the breaker structure, without a breaker structure, preferably, because that's where what's really going to help out when the market in terms of looking for even a more quality setup. But even if you don't have a breaker structure and you're still taking a trade in the direction of the higher time frame, and you have an imbalance or gap resting back at that supply zone, in this case here, is it still a valid setup? Is it still high quality? Yes, like right here. The market rejected the higher time frame zone, the bigger box there. We got a nice push down, aggressive selling to the downside. You can see here multiple red candles. And when it comes back to the zone right here, there is an imbalance. I'm going to show you here right quick. All right. This is what makes the difference of a trade being high probability versus low probability, or high quality versus low quality. See this candle here that broke below the bottom end of these bullish candles right here. So you got to push down and pull back. The last bullish candles to the upside here. And then you have the first the first bearish candle that breaks below the bottom end of the bullish candles. That's where your imbalance or the gap is going to lie at. Okay, that's the candle that's going to make up the gap or imbalance resting back at the zone. So when this candle breaks below this area here, then we get the very next candle. We're looking to see how far back this candle here, after the candle that broke below, pulls back. Okay, it only pulls back with the wick of it to this much right here. So we have a small gap right here back to our zone. So we'll wait for the market to come back and tap into the zone, fill this gap right here, and then we'll look for an opportunity once it breaks in the opposite direction to do what? To go short. Okay, and then what we're going to aim for, if you look to the left hand side, some gaps below. All right, just makes sense. So that's a setup where there is a gap or imbalance. And here's another one. This one here is actually a supply setup with a breaker structure. A low pullback, couple candles pullback here. Okay, bullish move on the pullback, and then we get the bearish move to the downside where the market breaks below this area structure here. All right. So when we have that right there, the market pulls back to this area of supply. We got to push down low, lower high, breaking structure lower. All right. Not only in this case here, once it breaks structure below this area here, you can see that we broke below this low right here. On this move to the downside right here, you can see we had a push down here. All right. Breaking slightly below this low here, pulls back, and then we break structure below this low here. Pulling back, key area of supply right there. I'm looking to go short right here at 22,824. There's also a gap resting back at this zone. Look, when the market made a bullish pullback right here, okay, this is the last bullish candle to the upside. What candle broke below the bottom end of that bullish candle? This one here. This is the candle that the gap or imbalance rests on right there. Okay, now the very next candle, which is this one here, typically would be like a bearish candle, but in this case here, it's a bullish candle. It pulls back this much, and then we also have some pullback on this bearish candle back up to here. But there's still a gap resting from here to here on back to the actual supply zone. So we'll wait for the market to retrace as it push lower here to retrace, fill in the gap right here, tap into the demand zone. This makes it high quality. So these are the type of setups. What I'm trying to say is that it's going to help you stop losing money and taking bad setups when you're actually trading. So pulls back right here, and then does what? It pushes to the downside. We get in the trade right here at 22,825, and then we're aiming for what? To fill the rest of the gaps, possibly coming back down to the downside. At least take the low right here and maybe fill this gap right here. Look what happens. The market rejects here, fills the gap at the supply zone, rejects 824, 825, get into the trade, take it on down. It does pull back right here, but not before. It actually comes down here and does what? Takes the low out and fills the gap right there. Now, if what makes it low quality or low probability, this is the type of setups a lot of you are probably 50-50 on, or you're taking, a couple wins, couple losses. If you stop taking low probability setups and focus on the high probability setups, you're going to see a difference in maybe your win rate. You'll start to see that you're taking more profitable trades, ones that you can hold for longer, say for example, versus ones that are going to be very short-lived on low probability setups. Low probability means that, say for example, like right here, where this candle broke below, and it immediately came back after that and tapped the zone, and then we moved away, and then the market comes back and taps into the zone, well, the gap would be filled. So basically it does something like this right here, just to show you. We broke here with that candle there. Then if we come back immediately and fill back to the zone, right, before we get a break of structure below, and then once it breaks structure and then comes back to this area, the gap's already filled there, so there's no imbalance. The imbalance is important because there could be, I always say this, the reason or the purpose of the imbalance of how I actually trade and what I look at is that if the market is selling off quick enough and we break structure, and that means the banks and institutions are making big moves and filling orders pretty quickly, and they may not have time to fill them all. So when they get back and fill that imbalance on a nice pullback, then eventually they're probably going to react at it, fill the rest of their orders going short, and the market goes to the downside. That's what we want to do, is take the trade with the banks and institutions. Don't be trying to trade against them, because that's when you'll also take losing trades and you will start to, lose your money, okay, and blow accounts. All right. So that's what I want to share with you today. What makes the difference of you becoming a profitable versus a not profitable trader, makes the difference of you losing money versus making money. This is what's going to help out taking high probability setups. Okay. Now, if you want more insight or more information surrounding how I personally trade using the strategy and how I trade surrounding multi-chart confluence, think about maybe becoming an elite member or an ultra elite member. The link is down in the description portion of the video. What do you receive? There's so many perks and rewards that come with each one of those tiers. Becoming an elite supporter, you receive my trade breakdowns. These are trades that I post over on the Discord community. I break them down in detail as if you're sitting right next to me so that you can understand full on why I took those setups, where to place stop loss, where to place profit target, the full on 9. Okay, I mean, really, everything that you need to understand. Outside of that, you also receive the video playlist, which is a list of good quality videos that you probably definitely want to watch. That provide, just some great valuable information surrounding, again, how I trade. Also, a fabulous video covering market structure for anyone that's interested just as well. Again, the link is down in the description portion of the video. It's titled Ultra Elite Supporter. But once you click that link, you'll see that 3 tiers will pop up. Choose either to become an elite member, or you can choose to become an ultra elite member. And if you choose to become an ultra elite supporter, what you receive in addition to the elite, becoming an elite supporter, everything I just talked about, you also receive my live recorded trading sessions and market recap videos. So you receive more, okay? So again, each one of those levels come with perks and rewards. Again, the link is down in the description portion of the video. Scroll down, the first link, you'll see the Discord. It is free to join. Come over and join us. The second link you're going to see is Ultra Elite Supporter. Click on that and you can choose to either become an elite member or an Ultra Elite Supporter, okay? That's all I have, guys. I appreciate everyone that takes the time to watch the video content. If you did not subscribe during this time of watching this video, please make sure to do so by simply clicking that sub button. Make sure to turn your post notifications on. And last but not least, drop a like on the video by clicking the thumbs up button. I greatly appreciate it. It helps the algorithm out as far as on the channel to get the information to people that need this quality information. Take care. See you in the next one.